The VIX, or the volatility index, the higher it goes, the more fear there is in the market. The lower it sags, the greater the complacency. Now, as stocks have rallied, it pulled back about 40%. But lately, it has started to move slightly higher. So what is all this telling us about the faith that investors have in the stock market rally? And how can this help you protect your portfolio? Let's find out. We have Paul Britton. He is the CEO and Chief Risk Officer of Capstone Holdings. It's a firm that specializes in volatility trading and manages over $1 billion. Paul, it's good to have you with us. Thanks for coming in.
Nice to see you again.
Explain what's going on in the world of volatility. We're around 25 on the VIX, but you say pay attention because all might not be well with this rally.
It really seems to me that there's a cautious optimism out there. And that, for me, says that volatility has gone down tremendously from the levels we saw in 2008. But institutional investors are clearly scared. They're scared for one reason, that they all want to find ways to protect the gains that they've made in 2009. That is driving up the price of, in the Volatility Geek Handbook, of skew. Skew is really the level of the difference between the price of puts and the price of calls.
So puts have actually started to increase in value versus calls.
Spot on.
Right? Everyone's buying protection.
Correct. And that's what, to the viewers and to the investment community, that's a clear signal that the institutional crowd is not comfortable with the current levels that we're at in this marketplace.
Now, is it really just a game where people look at these annual returns? I mean, you talked about, protecting the gains that they made in 2009.
Yes.
But if you take a look and you go back before 2009, we're really only at levels that we experienced in October and November of 2008. And no one's going to say that those were really great because
that's a brilliant point.
We've had all this financial debacle.
Yes.
So is it really just a question of people kind of micromanaging the portfolio because they want to show good performance?
Yes, absolutely. To further that point, I think that you're absolutely correct, that the VIX at 25 is still historically high. But I think it's still fresh in everyone's memory of what we went through in October, November last year, where we saw the VIX up at 89. I think that people are not buying the normalization story. So they're saying that, well, it's a V-shaped recovery, but the speed of the V, of the way that we are accelerating up the back end of this V, is causing people for concern and causing people to say, how can I lock in these gains? What instruments can I use to lock in these gains? Because I am certainly not comfortable with the current valuations of the underlying market. I think there's a lot of technical reasons, and it feels like it's a technical rally. It's causing people to say, I'm up 25%. How can I put a couple of percent back into my portfolio to close the doors?
Right. Right. Almost the year is done and dusted, and it's only October.
The year's done.
Let's finish it off on a good note. But they don't want to get out, right? Isn't that the other thing? They don't want to get out because that's why they'd be buying puts.
Yes.
Because otherwise they could just all go to cash.
Correct. People do not want... They know the train is picking up steam. They don't know how fast the train is going. They know that there's a chance that it can break down. So they want the protection, the insurance, that if it does break down. But they don't know that when this train leaves, that there will be a certain velocity, and that means that they can't jump off. So it's a great way to protect your portfolio by really investing some money into protection. And listen, I don't understand why, if me and you are driving a car in Manhattan, we need car insurance. If me and you who are homeowners, we need home insurance. Most of us here have got life insurance. Nobody has got portfolio insurance.
Right, unless they're going out and they're buying
they
buying
have
puts.
To be actively getting involved and managing their portfolio.
But let me press you on the other side of that, which is that if this relationship is slightly out of whack and the premium, the put premium, is elevated, then it gives perhaps opportunity to those investors that believe in the rally, that want to get long. They can sell this insurance.
You're absolutely right. But it takes a brave man. It takes a brave man, in my opinion. I think that, as what I've said before, that it is way too fresh on people's minds of the events that we saw in October, November. For the average investor to go out there and sell puts, I think is a dangerous strategy.
All right. Now, just to sort of change the topic for just a second, give you about 15 seconds or so. There's a day tomorrow where you're actually,
yes.
and you and a lot of firms in the alternative asset community,
yes.
you're putting aside your commissions for an entire
Correct.
day. Tell us what's going on.
We have an annual charity event that we're doing tomorrow, October the 1st, for a very sick boy in Chicago, and it's for the cause Jasper against Batten. Batten disease is a very, very rare form of children's disease. We're going to donate all of our commissions. We're asking the rest of our peers and our prime brokers to donate as well to see if we can really help this young boy.
All right. Well, I want to thank you very much. Good note to end it on. Thank you very much, Paul Britton, coming in. Capstone Holdings, the CEO, talking to us about volatility.